Today, I'm chatting with Celeste Lindman, a portfolio manager and investor since 1992. Today, she's an active swing trader of stocks, options, and futures using the DTI method. We will learn in this episode about some trade signals and setups using a short-term and medium-term hold focus that applies her simple yet unique tape reading method using her scans. I'm Lex, and this is OptionsBrewTV. Hey, Celeste, thank you for coming to the show. Welcome to OptionsBrewTV.
Thanks for having me on.
Yeah, you're welcome. Always a pleasure. So we're going to go over kind of your trading method, I think, right? Is that safe to say?
Sounds great.
It's called DTI Trader. Is that right?
Yes.
Okay, I'm not going to ask you what DTI stands for, but what does DTI stand for? Or does it?
It does. It stands for Diversified Trading Institute. So there you go.
Oh, is that you, or is that more of a bigger entity? How would you characterize?
It's a bigger entity. There's several traders there. Tom Busby, Jeff Smith are the originators. Started it in about 1996, and we've got several other traders as well.
Okay, have you been with it that long, since 96?
No, not since 96. I've been with the company since 2009, right after the crash.
Oh, good for you. So we were chatting pre-show. So speaking of crashes, right? I made the 87. There was a little baby one in 92, kind of with United Airlines, I think. And then I certainly hit 2001, 9/11, and then 08, the housing crisis. Have we had another one since 08?
Probably not. COVID.
Well, oh God, what am I thinking? Duh. Yeah, COVID wasn't so much crashy as it was just kind of continuous, right? It felt like a bad roller coaster that wouldn't go on the uphill side.
Yeah, some uncertainty, with all of that, and didn't feel like you had really treaded that type of water before.
Right. Now, your trading experience then, you weren't a floor trader, right? I think we talked about that. So not a floor trader, but you learned your craft off floor, correct?
Right.
Okay.
Yeah.
Did you have a mentor of sorts, or, tell us a little bit about your background. How'd you lead up to this point? Where did you start?
Right. Well, as we were talking before, I earned my degree from Indiana University in 1987, had a finance degree and an accounting degree. I always was interested in the stock market and trading with that. And so my first job was as a stockbroker. I thought, I'm going to be analyzing stocks and doing all that. But what I found out was I had a sales job, which was great. And it was wonderful working with the people, but I wanted to do more of the individual investing myself. So I kind of started out the hard road. I ended up leaving that company, ended up earning my CPA, working with Ernst & Young, and being able to start understanding the movement of stocks that way. But it wasn't really until 2009 that I really got my mentor, and that was Tom Busby and also Jeff Smith, really teaching me a shorter term trade, and also kind of looking at the tape instead of the technical analysis. So really broaden my horizons that way.
Do you have a big background in options, or not? Is it more stock trading that you do? How would you describe that?
I trade stocks, options, and futures. And of course, I do longer term investing as well. But for a swing trade, short-term trade, definitely stocks, options, and futures. And of course, with the shorter term, generally I'm doing more of the options or futures.
Okay, awesome. Well, I'll get into that as we go through. I think you're going to share your screen, right?
I sure am.
Okay, let's go through it and let's learn some stuff.
Well, the way I'm going to tell you about how I trade is basically telling you about my favorite trade setup. And that really sets the foundation for everything that I do. Okay. Because what I found was that the trends begin to change in the shortest time frame. And that's kind of what we're going to look at. I needed a way to make money in up markets, down markets, and even like what we're seeing now, even kind of sector shifts, when you see like the different stocks that were strong during COVID versus, what has been strong since, 2009 after that crash. I mean, take Apple, for example, actually shorting Apple this year, having held it long for all of those years. So needing some kind of method to help me to see those turns pretty quickly. And so it's all kind of summarized here in this favorite trade setup, along with how I use the tape reading as opposed to the technical analysis. You're not going to see a lot of charts. You will see some, but you're not going to see a lot of technical indicators on those charts. So
Okay.
let's go ahead and get started.
Perfect.
And so basically my favorite trade setup, and feel free to jump in with any questions that you have.
Okay.
It's a swing trade where I'm going to hold that anywhere from 2 days to 2 quarters if I can. I want to buy it at wholesale down at the bottom, and I want to sell it at retail. That's going to be my goal. And I can do this, as I said, in any market, up, down, changing sectors, whatever. And my system is going to tell me exactly where to enter and in which direction and when I need to exit.
Okay, let me jump in real quick. Sorry.
Sure.
Can you go back one? So you mentioned the word wholesale and retail, right? So I'm assuming that, I just want to make it clear so folks understand. I'm assuming the wholesale price, that's your entry trigger. Is that safe to say?
Exactly.
Okay, and then you absolutely publish or talk about an exit price, which would be the retail price. Is that
Yes,
also
that's
correct? So and if someone were to be a part of the DTI, would they would get those two values? Is that safe to assume?
You would see that on the software. Yes,
Got it.
on the software that is projected. Yes.
Okay, perfect.
And I'll show that to you.
Okay, awesome. Makes perfect sense. Go ahead. Sorry.
Okay, great. No, thanks for that clarification. That's really, really good. And so the other really cool thing is that this type of trade sets up every week. There are always opportunities for me to trade, whether it's a stock that I might hold in a portfolio like Emerson, that I can hold with 46% earnings plus dividends on a stock in 3 months, or Halliburton, 58% plus dividend on a stock in 1 month, or even here like Roku. I mean, this stock moved up 10% in just, before lunch. And here's kind of where you can see, you know, I am not as savvy as you are, Lex, on this screen.
I can draw, don't worry. You just kind of, I can see your mouse. I'll circle.
Okay, right down here is where I would call this wholesale level. And this is at the cash open. And the first target is right at the top of this green bar here, first target. And as far as a retail, and then I'm going to let that trade ride all the way until I'm going to exit out based on what the next time frame is going to tell me. Once the clock ticks, yes, right there. The clock is going to tick. Lunchtime, I'm going to get a new time frame. I'm going to see how Roku trades throughout that day. See if I want to exit it or if I'm going to stay in with that trade.
Okay, let me ask a question. Sorry. Okay, you might get to this, so just tell me that's the answer if it is. So this green band, okay, the one that you have right here, and you've got a red band. So the software produces these numbers, right? Again, I don't want to get into the secret sauce at all, but so you're saying that your software will produce this band, and as an education tool, we know when it breaches that band, we might be getting long here. Is that correct? Or somewhat correct?
That is correct. Yes. So we expect it to go to the top of that green bar, and that's a first target. And then when it goes beyond, we continue to hold that as well. But our first target's going to be up there at that top.
Okay, at this top. And then let me ask you another question while I'm thinking of it. Is this a daily chart? Or these minutes? How long are these bars?
Excellent question. This particular picture these are 30-minute bars, but you would get the same exact type of a picture. The time frames will change, the bars will change as far as the bands, the green and the red will change. But you'll get that for the daily and also for the weekly.
Okay. Do we ever talk about minutes with DTI, or is that not something that you even verge into?
We do when we're doing a day trade.
Got
it. Trade, you look at 1 minute, 2 minutes, 5 minutes, 30 minutes, and even a daily. Okay.
One thing we'd like to do too, Celeste, what we'll do is difference between day trading and swing trading. And you've mentioned it, but let's just clarify while we're at it. Day trading is you're gonna enter a trade today, and you're gonna get out of it by the end of the day. Is that safe, or is it even a little bit longer? How would you define it?
That's safe. That's how I would define it.
Okay. And you mentioned swing trading, couple days to, I think you even said a quarter, if I'm not mistaken.
Yes. So a shorter term swing trade would be anywhere from a couple of days. I mean, basically we're looking to hit profit target. And if we hit profit target in 2 days, well, then we're out. There's no reason for us to continue hold. If we can stay on a trend, and we can hold it for 2 quarters, then absolutely we'll hold it for 2 quarters. But generally speaking, it'll be, those kind of shorter term, 2 days, 2 weeks.
Okay.
time frame.
Got it. Perfect. Okay, go ahead and go. You keep going because I have more questions. There's more questions, but I want to, you might answer them, and if not, I'm going to ask them anyway.
You're doing a great. I appreciate that. Those are great questions. So thank you.
you.
The best part is that I am letting the market do the work. So you can see already, I'm not getting into a lot of the technical indicators there, although I do believe that those are really great. But as I would always say in any presentation, that there is risk in markets, and we all know that trading is risky, and we want to know what we're trading and how we're trading it before we even click a mouse, because to us, the name of the game is to be able to come back and play again tomorrow with capital. So we work really hard at protecting that capital, and I'm going to show you a few tricks on how we do that as well.
Okay, good.
I've got 3 steps to my favorite trade setup. And the first one is market direction. Now I'm going to tell you, some of this is going to sound a little simplistic. And that's kind of good, because sometimes I think we make it hard. I think I make it too hard, and don't get me wrong, because trading is hard. It is challenging. There's a lot to it, but sometimes we look at a lot of things. And so I try to keep it simple, but market direction of the stock that we're looking at, whether we're going to trade the option or the stock itself, is that we want those directions going in the same. And I'm looking here, I'm talking about daily in this situation. Like, we would want the daily moving up. We would want the weekly chart moving up. We would want the monthly chart moving up. All of those in the same direction. And that's kind of where we get starting into that tape reading, where we're looking at the day open and the week open and the month open. So that eliminates the need for us to look at a lot of different charts, or where they're, trading with the technical analysis. That is very, very key. And that's what I found help to keep me more successful. And then secondarily on that step is making sure that we're in the same direction of the S&P. So we want the S&P also to be moving up on the daily and on the weekly and on the monthly. And this is for that swing trade that we're talking about, not a day trade. If we were talking about a day trade, we would go down a couple of time frames to your point of the minutes.
Okay, let me ask a question. So you said S&P has to be in the same pattern, daily, weekly, monthly, up in this example, right? With the stock in question, right?
Yes.
Now, what about, do you use like a QQQ or a NASDAQ at all for stocks that would tend to, mirror that index, or not so much?
Absolutely. Yes. And the more trade, especially when we're looking at futures, we're going to definitely look at more indices, and absolutely, if you're looking to trade a tech stock and looking at the QQQ or the Dow stock, the DIA ETF often we'll look at, but yes, wanting those to go in the same direction, but trying to keep it simple with that S&P.
Okay. Makes sense. Good. Okay. Great.
And this is really key, because what we have found is that when these are not aligned, it just means that our odds of success are reduced. Okay. So there are enough tradable instruments and opportunities out there to kind of find that cream of the crop for us. So we want to have that step one everything going in the same direction, the stock that we're looking to trade and that S&P generally to be going in the same direction.
Okay. So makes sense.
That is step one. But step 2, you got to have a watch list. You have to have the stocks that are meeting the criteria of being above their day open or month open, week open. And so we have a watch list. So I've got a couple examples here, and this one was taken several weeks ago. Okay. And what it's doing is it's telling me this Y here, kind of the middle left of the screen, is for the year, means it's the year open. Thank you. The M's right next to it, month open. Looking at the 5-day average kind of gives us that week. And then the day open. And then this R is for the reference bar. And that, if you heard me talking a little bit about, I said, hey, Roku, when it opened up and it went way beyond our green bar, and I was waiting for that lunch hour. After that lunch hour, we're going to have another reference bar time, another reference time we're going to look at that would help us to decide if we're going to continue with that trade or not. Okay,
let me ask a question about R. I'm not understanding the lunch part. I love lunch, don't get me wrong. Is there something significant to the lunch hour?
Yeah.
Other than it's the lunch hour.
Lunch hours is very significant, but yeah, the times what Tom Busby and Jeff Smith found years and years ago as they were studying this market back in 1987 was that these were key times where the market would pivot, make changes if there was going to be a different direction. There's 4 times within a 24-hour market that they pinpointed. Okay. So the 8:30 Eastern or Central Time open, cash open, the 12:30 time frame Eastern time, that would be another reference time. And then right when the futures markets open back up again at 5 p.m. Generally, and then again at 3:30 in the morning when the European markets are opening. So those are 4 times within a 24-hour market. We use those more for the day trading. For the swing trading, we're able to kind of give this kind of a quick look.
Okay. Yeah. I mean, I think those are great points. I didn't think of it that way relative to the 24-hour, the way you described it, but that's interesting. We tended to find the ARP, or I'm sorry, the lunch hour part. It seemed like you had that 8:30 opening and you had a push or a pull, let's call it. And then once you got to that middle part of the lunch hour, it seemed like the institutions kind of had positions set, and it was a little bit of the ocean kind of swaying back and forth, trying to figure out whether it's going to go right or left. Yes. And then, clearly it moves into its direction as the latter part of those timeframes occur. But we notice that a lot too in our trading pattern as well. It's interesting you describe it as such. It's great. Yeah,
exactly. Very interesting. Yeah. Cool. Well, and notice here too on this, it was taken, a couple of weeks ago. We've got stocks like you don't see on this particular scan here, you don't see the Apple, you don't see Microsoft, you don't see, Tesla, but what you're seeing is kind of true to kind of a little bit of what we saw with COVID, like Etsy. Here you got the QQQ, you got Riot, currencies, the cryptocurrencies. This has been an interesting one, GT, Goodyear Tire. And Baidu. And then, you got some of these pot stocks coming popular now as well too. So that's kind of what was showing up at that time. And when we would look, and I'm going to show you some of those charts here in a little bit, you can see how that traded through the day after it was pinpointed in this particular scan. Okay. Here's another picture. This one was taken yesterday. And you can see Etsy here on the kind of left here. First one is still on there. Rig, the Transocean rig has been showing up. And, a couple others here that, and a lot of them, are newer ones as we've seen the small caps emerging, as well as emerging markets too, maybe pulling back now, but still seeing some of that in those stocks. And running those scans actually, and when you take some of those side by side, like an Etsy, for example, and you take it from the year open till now, and you take Apple from the year open to now, and if you were blindsided, didn't know which one was which, and I said, hey, which one would you want to be long in? You would definitely say Etsy based on the look of the chart. You wouldn't be long Apple. You would have made more money from a long position on the stock. With Etsy. I'm assuming 6 green stars is great, right? That's everything's in place, right? Yes. So we got a viewer question. How big is your watch list? Is it the universe of stocks? Is I guess what the viewer's asking, or is it a small universe that you create? It's this particular scan is giving me the top 20 for the day. Okay. And so I'm going to scan first I'm with my own eye for those that I am maybe more familiar with, like the Etsy or the rig on this particular scan. But I'm going to get to know some of these other stocks because they're going to start showing up more and more. And that's the way that's the way we were able to find the stock like JD that was very popular with COVID before it was ever, starting to get popular. That's how we found Zoom before it started to get popular, because it started populating right here. And this is kind of what I mean when I say that, you first see that trend change in those smaller time frames and it builds up. And so by the time it makes this list, it's pretty good stock and has the potential for some good trading opportunities. Great. Okay. Understood. Love it. Okay. Great. And so this is a different type of scan that we use as well. This one is based on seasonal analysis. And what it's basically telling me is the way I set this scan up here is right here on this total where it's, yes, thank you, where it says 8, that is 8 out of the last 10 years. So 8 of those years, on these particular dates, all the way over to the left, this particular stock with the symbol all the way to the right, traded. Thank you.
You got it.
Great. Traded in a certain direction 8 out of 10 times. So it had an 87.5% win rate, and it had this average P&L percentage return. So on this one, you could buy it on March 8th. 2019 was the last time that it happened. BKNG symbol, holding it for 30 days and earning that percentage. But this is what I look for here is if I follow this symbol column down here, look how many times Alta shows up.
Sure. Okay.
Alta. So I'm definitely going to be looking at Alta and look at the day holds. I've got 20-day hold, 30, 20, 10. A lot of Alta in this time period over here to the left on these dates, March 8th, March 7th, March 3rd. So like right now, so you should write, these stocks down to take a look at them for those types of opportunities. There's another one here, Netflix shows up. Netflix is up here on the right side of the screen for a 30-day hold. It comes down here again for another 30-day hold. So I'm going to look at those stocks as well. And I'm going to put them into that same system where we have the green bar and the red bar and see how it lines up.
Okay. So once you so is the process, you get this sort of indication first, this sort of table and maybe the star table, and then we have to go to the charts ultimately to see how the bands align. Is that the steps?
Then I'm going to, exactly. Then I'm going to put it into that chart and see how it looks according to those bands. And I'll be able to do that on a daily, an intraday, and weekly.
Got it.
Look.
Okay. Understood.
Okay. So that's step 2, is having that watch list and being ready to go when those markets are lined up. And then the next step is basically, that trade management. And this gets into the entry and the exit and the targets and the protective stop. And here's something I want to share that is really important. And it seems a little basic, but it is so helpful. And I'm going to show you an example as to why. Perfect. But basically, to confirm the entry, like say I've got Baidu on my list and the market is getting ready to open, and I'm going to watch Baidu trade. Well, I want Baidu, and this is down here at the center bottom is the opening. This blue bar here is representing this open of this. This actually, I think, is the I think this is the S&P futures actually. Okay. But at that time, I want that market to be moving up at 8:30, that blue bar. And you can see those other blue bars. Those are basically pinpointing that 24-hour market that I was talking about. And since this is a picture of the futures market, the S&P futures, you can see those bars are all, it's one continuation, no gapping, so to speak, because of a market being closed. But I want that from 8:30 to 9 o'clock Central Time, or 9:30 to 10 o'clock Eastern Time. I want that direction moving up. And you can see how we basically, this is that trend up.
Yeah. So we start breaking that top blue line up in there, and with the trend, as you can see to the farther to the right, is definitely in the correct direction, right?
Exactly.
Just heading that way.
Exactly.
Perfect.
Yes. Thank you very much for that. And so let me show you an example as to why this is so important. This is a picture of CarMax, and this is an example from a little while ago. And this blue bar here, all the way to the right, this very long blue bar represents that cash open. And so you're thinking, yeah, wow, it's really strong. This is great. It was something that made my list from the way that the other 2 steps that we went through. But here's why that step 1 is so important. All of step 1 is so important. So that's moving up. This is great. But look what happened after the market opened. It went obviously down. So here's this 8:30 open. Here's this lunch hour time frame. But it never, it was not a good day to get into CarMax. So
Got it. So if you had that channel built, it would have, where would that be? Would it be up here more, or would it have been down in this range that the blue, I'm sorry, the green red channel?
the green channel would have been up in that top area where you did have one of those red boxes.
Yep.
But it would have had a failed signal because
Got
it went immediately down. And probably this one may have gapped. I'm guessing this one may have gapped up because of earnings and probably came straight down into that red zone.
Got it.
But from here, most people would say, hey, this is up from, yesterday's close. It's up, it's gone from $86 to $90. That's up, right? But when you put it into those parameters and you see what's actually happening, it's not a good move. But here's where you really got the clue. And this next picture is even more important. And this is why this step one is so important. And that is following that S&P. Okay. So here's a picture of that S&P futures. And again, this big green line that I put there, that represents the cash open of the S&P. And it never moved up. It only came down. So if that red and green bars were on there, we would definitely be into that red zone. But look how much more devastating that was for the S&P, because something was going on. It wasn't a good time. Whereas you go back and you look at CarMax, it wasn't as bad as the S&P was. I mean, it was worse to be in the S&P, what was going on there. But that's why you want those both going in the same direction. CarMax might have paid you a few days later after this cleaned out with the S&P, but it wasn't going to pay you on this day.
Got it.
And that's not where I'm going to want to put my capital.
Important note to follow all the steps, right? So if you didn't remind me of the S&P part, I would have forgotten about that. But now that you say it, I'm like, that's an important point. Very good. Okay. Understood. I love it.
Now let's take a picture. Let's take a look at where it works. Now, remember that QQQ was on that scan. And so this is what the QQQ looked like on that day. And here's this blue bar, and that's the open.
Yeah. Okay, that's the open. Good.
Cash open, and you can see it has moved into the green zone, and it has stayed into this green zone. So we can signal getting into this trade anywhere in these time frames here, on these 30 minutes here. And this one traded above our first target and went on to beyond. And so we would have looked then at the 12:30 to see if we're going to continue on, or if we're just going to take our money and bank it.
Sure. Because so now, where do you get? So just so I'm clear, do you get in somewhere on one of these bars, or do you have to wait for it actually to breach that upper green zone before you actually send out or discuss the buy signal?
We, in the training that we have with this, we show that there's really like 2 or 3 different opportunities to enter, and it's going to be based on your own gut, how risky you want to be. Often we are getting in on this first bar and very safely in on the second bar. We generally wouldn't wait until the third bar. Now, a lot of times these trades will move slower, so they're not all the way moving past that green zone. And I have a couple examples like that as well. But this is where we're going to manage this trade and enter into this trade using that type of a reference. Now, this is based on the average true range, and you can see that right there at the top of the screen. This is a proprietary DTI setting of the average true range, but that is what this is based on for that 30-minute time frame. Now, when we switch to the day, then that true range changes based on the day. And when we change to the week, it changes to the week.
Okay, understood. And I don't want to get ahead of you, but I want to talk about stops and everything. And if it goes down here, if you're going to cover that, then let's answer it then.
Yep, right next. So we've got our entry into this buy zone. That's our entry. We've got our first target up here. And now let's take a look at where we're going to put our protective stop.
Okay.
And in the same way that there are 2 to 3 places where you can enter, there are really 2 to 3 places where you could put your stop.
Mhm.
The safest, where you would lose the least amount of money is to put it right here on that sell zone.
Okay.
Easy enough. It's laid out there right there for you.
Mhm.
And a lot of times we will do that when we enter into the trade. We will use this 30-minute look. And if it's going to come down into the sell zone, well, then we're going to go ahead and go to the sidelines. Sometimes we might let it come all the way down here to the bottom of that target to get out. But generally speaking, when we enter into this trade, we're going to, if it comes down into the sell zone, we're going to go ahead and exit that trade.
Okay. And is that something you set previously? Do you put a stop out in that zone somewhere based on your risk tolerance, or do you do it?
Basically, so I'm going to know before I enter this trade,
Mhm.
because I'm going to know this bar coming in here right when it opens.
Yep.
I'm going to be able to know exactly, I'm going to know where I'm going to enter before I click a mouse. I'm going to know where my target is before I click a mouse, and I'm going to know where my stop is before I click a mouse.
Got
So
it.
that when I do click the mouse, I can put all of those in there.
Perfect. Okay, good. So that's the discipline part about this, right? I love to
Exactly.
talk about discipline, so that's good.
I love that. Yeah, got to talk about the discipline,
Good.
because that's so very key.
Yep. Great.
So,
Okay.
all right. And so then basically, that's what I was saying. We determine this is the exit of the trade. We know the entry, the exit, because we know our targets and we know our stops
Mhm.
on that before we do enter that trade. And again, this is just showing this target, excuse me,
Sure.
is our first target. And then as it goes beyond, we don't have a problem holding it beyond.
Right. Okay.
Okay.
Good.
And as I was mentioning, using this process, these 3 steps, the market direction, having a watch list, and then knowing your entry, your exit parameters, managing the trade, using those steps is exactly as I mentioned, how we found JD,
Mhm.
exactly there at COVID, and trading it and this is an example of being able to hold a stock for a very long time and make 112%, just on a stock
So I'm
alone.
trying to look quickly. How much time is this? This is what, March to what, August-ish?
August and beyond, September, yes.
Okay.
Mhm.
Yep. Good. Okay. So I guess what I'm trying to understand a little bit is when you get, this is the wholesale part. Am I right about that?
Yes,
Okay. And this is the retail part.
yes.
Um, what I'm curious about is how come this isn't necessarily the retail part? How come you don't necessarily get out there? How did you know to hold here and continue? Was there some details with your scanning that told you to stay aboard here? Does that make sense? The question?
Yes, it does. It makes really, really good sense.
Okay.
And so this was this is actually represents something that I personally traded multiple times.
Okay.
I personally held the stock long until that time period.
Okay.
But I also traded that stock and options multiple times throughout that time period.
Okay.
And because there are places where you can add. Now, the other thing is that to point out is that this is a daily chart.
Okay.
So I've just switched the view. I mean, we just went from a 30-minute
Yep.
to the daily. So if we took a microscope onto those sections and looked at that 30-minute, you would see that wholesale and retail moving inside that 30-minute. That
Got it.
provides a lot of opportunities for a lot shorter term swing trades.
Okay.
But that this was one that just by applying those parameters from a longer term,
Sure.
because what I'm talking about for swing term, we're generally looking at a day, a weekly, and the 30-minute.
Right.
And when I'm looking at a longer position, I'm looking at the weekly, the
Mhm.
monthly, and the day.
Okay.
And the scans can do the same. So a longer term position. So that's why something like JD, long way to answer your question, can stay on a scan for a longer term, more position type trade.
Okay. Understood. I get it. Okay. Awesome. Really
Great.
cool.
And it's the same thing too, like with Zoom, same idea.
Is this the Zoom that we're on right now? That Zoom?
Yes, it is.
Oh my gosh. They had earnings the other day, didn't they?
Yes.
Maybe yes.
Yes. And, and if you look at Zoom's another one, it's like you talk about, the trends start, in my opinion, in that smallest time frame. Zoom isn't as favorable this year from year open as something, again, like Etsy or Baidu. And so by sticking with the strongest horses, that's when I get to learn, other stocks. Like I had never traded Zoom or JD before COVID.
Okay.
Really didn't know much about them.
But
so now I know a lot.
Appeared in the scan or whatever, right? They
Yes.
popped up. Oh God, how cool is that?
Exactly. Yes. Yeah, love it. I love it.
Very good.
Makes it easy. And here more recently, here is MJ, into the cannabis stocks and ETF, 10.78% in 2 hours. You can see the green bar, the red bar, and that is from that 8:30 open. Same thing with Baidu. This is a daily picture of Baidu. So this gives you a chance to see what it looks like, not on a 30-minute, but on a daily. We've lost those blue bars. You see what is now a purple bar. That's just signifying to me that there was a lot of power behind that move, which shows that strength as well. But Baidu, with that, looking at that scan, me going through those steps, pulling the trigger, 25% in the stock alone in 5 days. Wow. And then good old Goodyear tire.
Right. that sounds like a Celeste favorite.
It's like becoming one. And I just noticed that is the wrong chart, but it still has the Baidu. Sorry about that.
Yeah, I see that. Yeah, that's okay.
But the stock did move that 5%. And if you go now and you look at a chart of Goodyear tire,
right,
you'd be quite impressed. And it keeps showing up on the scans, and you'll see why. And so this is basically what I go through, and this is how I trade, and this is what I learned at DTI in 2009, really fine-tuning, being able to do that swing trading, shorter term trade, really able to up my returns on a shorter time frame. Great. And now what I want to say too is if anyone is interested in learning more about this or getting these types of tips from not me, because I'm not all that smart, I just follow this process. But every Friday at 12 o'clock Eastern time, and what is 11 o'clock Central time, we have an event at DTI. It's called Ask the Pros. And we sit down with the just smartest minds that we think in the industry, where we can find out what's making them tick, what they're looking at, and why. And this is how we find some of these different trades. Like, for example, you'll see Roger Scott right there, smack dab in the middle. Just a couple of weeks ago, he shared with us, he did the research on the 13F reports, what the hedge fund traders were doing. This is how he has found a couple of stocks like C. If you go look at C, the stock symbol is SE, C Unlimited, I think it is. Said he had never heard of it, but he first saw it there on that 13F. He shared that with us there on Ask the Pros, and he just went through that process a couple of weeks ago. In fact, you can go and get that recording and still find out what he's looking at. But we give trading ideas, stock ideas, this shift in the markets. Like we've talked a lot about Riot. We've talked a lot about what we think is going to happen here in 2021 and how to help navigate through that. So it's a really great event. So I'd love if people were interested and wanted to tap on that link that's shown right there. That's where they can get signed up to get those weekly invites.
We put that in the chat? Is it askthepros.com, or is it a link that you can dtitrader.com/ATP, right? Ask the Pros.
That is it.
So this is every Friday, Celeste, right?
Yes.
And you're in here too. We can ask Celeste.
You can.
Awesome. Okay, good. Yeah, we're going to put that out. That's fantastic.
Yes.
Great.
And right beside me there is Tom Busby, Roger Scott, and then we've got our oil expert guy.
The oil expert guy, this gentleman here?
Yes.
He's oil expert guy. We don't know who he is yet, but Mr.
Yeah, Martin Taylor. Oh, he's got a great English accent. You got to come in and just hear his English accent. And but we have a lot of different traders that rotate through there. Last week we spoke with a spy, a guy from CIA, former, and shared a lot of insight about how world markets think and how global, economies think. So.
Okay. And then if someone wanted to get your software, is that the right way to say it, and join up with DTI, can we go to dtitrader.com and go through the process there? Is that the idea?
Absolutely. You can go to dtitrader.com.
Yep. Okay. Sorry. Is it a prescription? Listen to me. Is it a subscription sort of idea?
It is a subscription idea, and there are a couple of different options. There's a newer option that I can't even speak about because I would just sound even dumber than I am. So, but there's a couple of different options that if you go to the dtitrader.com website, on that front page, you scroll down, you're going to start seeing about the roadmap software is the name of it.
Okay.
And also there's a tab you can click on the top to the right on roadmap software, learn more about it, find out, contact someone. We've got the best representatives out there. Awesome. Kelly Barber and Jeffrey Andraka, really great professionals to help answer questions.
Perfect. And it's interesting. I'm kind of familiar with a few of these folks. So that's great. Awesome. Yeah. Awesome. Well, that's terrific. That was really interesting. You want to answer a few questions, or do you have another slide, or can we ask
that's what I have. So if you have any other questions, happy to answer.
Okay. I'm going to stop sharing. So now we can see each other better. No, that's great. So I guess one of the questions that we're getting, we get a lot is, you use the stock to create your entry and exit point. And whether you're looking at technicals or not, you look at the tape, which is awesome. And you mentioned you trade options. Is there a favorite option play that you use when you get these entry points? Is it a spread? Is it straight buying a call, selling a put, or is it something a little more involved? Well, how would you describe that? I
typically will buy a call option spread.
Okay.
And I personally like deep in the money, but sometimes I will buy at the money as well.
Okay.
I just try to reduce my risk. If I want to own the stock, like I want to own JD, I'm going to sell a put. And then I will, if I hold a position, I'll definitely sell calls against that as well and just trade again. But probably the trade that I do the most often are the option spreads, the call option spreads.
So like a bull's call spread, you buy a lower strike, sell an upper strike call, even ratioed, so we don't get in trouble.
Yes.
Okay, good. And then just so clarity for some of the viewers is, when you said you sell a put and you're not afraid to own the stock, what Celeste means there is, if the stock absolutely trends downward and your put gets assigned, that means you're going to get long stock. You're not afraid to own that because you believe in it. And then you may sell calls against that long stock position and get into a covered call situation. So I think that's what you mean. Correct me if I'm wrong.
That is. Thank you for clarifying.
No, I just like to be, I just like to explain a little bit. That's good. So, and sometimes they call that the wheel. I learned that this year. I've only been in the business 30 something years, and I learned that that's called the wheel. I'm like, they're making this stuff up. I never knew that.
I never learned that. So thank you for teaching me that.
I didn't either. I learned it this year, the wheel. I'm like, okay, sounds good to me.
Works for me.
Good. Okay. Couple more questions. Are there any types of stocks that don't particularly work well in this system? And I guess what the question means is, you said Zoom, you said a variety of stocks. Is there anything that's kind of an outlier stock? I'm going to throw out Tesla. Is that just a crazy one that doesn't work, or does everything kind of work?
Tesla does work. Okay. And I would say that they all work. I just personally want to be careful. Like, if it's if a penny stock was showing up, I'm going to be careful with that. Or if it's just something that is really, once I go and look at the chart and it just, it doesn't look like something that follows my step one, then it's really, even though it made the scan, it's not going to make the list. Typically that type of stock, won't show up on a seasonal analysis chart that I showed you, that sometimes they will show up in that, they had a really great run. So I'm careful of those. Okay.
Next question. Do you use an ETF to actually trade the ETF? Meaning, if you have an oil one or a bond one, is that part of your watch list as well?
They will absolutely show up on the scan. So like you saw QQQ, or you will definitely see the ETFs. TLT has shown up a lot because it shows both the shorts and the longs. So if you want to look for short positions, you want to short something, with options or even the underlying, you can see that as well on those scans.
Okay, good. And that's actually the next question. Good segue. Someone asked, do you actually do shorting? And you just said you do. So do I have to think backwards? Do I have to go upside down and think of this on the shorting? So the green's on the bottom part of that, green band's underneath. Is that how that one works or no?
No, so red, so it'd still be the red.
Okay.
So like say for TLT, so TLT is going into the red. So you would want to use a short strategy, whether you're using a short strategy with options, or if you wanted to short the underlying, usually we're going to use a strategy with options.
Okay.
For a lot of people that don't feel as comfortable doing that shorting concept, we would say, look at the inverse ETF.
Got it.
Because then you can see the inverse of the TLT, going up into the green zone. They're going to go in that opposite direction.
But the signal would be in the red part of your graph as opposed to the green part if you wanted to get short for whatever reason.
Exactly.
Is that accurate? Okay. Makes sense. Awesome. Good. Awesome stuff, Celeste. This was really interesting. I got to tell you, like I said, I've been in the business a long time. I don't get a lot of this. I mean, the old days for me, it's like, hey, buy low, sell high, kid, and knock yourself out. Yeah. But Lee, I love having a system, and it sounds like this is fairly, automated in that it's doing the searching for you, right? And bringing to your attention some great opportunities, and then you set the discipline, and off you go.
It's a powerful machine. Yes.
Yeah, I love it. I'm very intrigued. So thanks so much for coming on.
Thank you.
It's been great to meet you, and I look forward to doing one of these again with you.
Sounds great, Lex. We really appreciate it. So
okay, have a great night, Celeste. I'll talk to you soon.
That sounds great. Thank you.
Bye.
Bye-bye.